Now, let's get back to gold because that is one of the big stories from the session overnight. Larry Shover is from Efficient Capital Management and has some thoughts from Chicago for us this morning. Larry, good morning to you. And some analysts were also suggesting that maybe investors were getting out of gold thinking that Ben Bernanke doesn't unveil QE3 on Friday. He doesn't deliver. You found a couple of other reasons why you think the gold price has dropped the past 2 days. Tell us about those.
Yeah, absolutely. First, gold has gone up 11% in the last 2 weeks. It was a freight train. And the thing about trends is that they seem to go on a lot further than most of us expect. And when they turn on a dime. So actually, this is just a healthy correction in gold. Secondly, the news was, and we don't know if this is confirmed, but Italy was talking about getting pressure and selling some of their gold. Keep in mind, they're the third largest owner of gold in the world. So perhaps they should sell their gold as opposed to issuing debt. That also, number three, would be exchanges in Shanghai have raised margins on futures, and that typically makes gold go down or any futures price go down. So a healthy correction. I still think the magic number is $2,000 an ounce.
Yeah, because you've always said to us and on this show, as long as there's cheap money around, gold can probably go higher. So in the longer term, you say gold at 2,000, what in the short term? What about long term?
Well, I think in the intermediate term, it's not out of the question for gold to be at $2,000 an ounce. It might be a little bit hard for Australians to put their heads around that because your currency is not cheap relative to everybody else's, but our money supply continues to grow. Even after quantitative easing, our money supply has grown by 1% in the month of August alone. That makes our money cheap. There's no liquidity problem in the world. If that's going to remain, gold has to keep going higher.
Hi Larry, Michael McCarthy here. Very interesting move, that story that the Italian central bank has sold gold. Given the high level of indebtedness around the world, do you think that there's potential for other governments and other central banks to do the same?
I think so. What a great idea about issuing more debt. Who's going to buy this debt? Let's sell the gold. Maybe it'll get the gold price back down to $1,400 or $1,500 an ounce, where it would make true sense to own it. But what a good idea. And Italy being the third largest owner of gold, it makes sense for some other countries to do the same thing.
But do you think that would actually potentially play out? Because that would be a huge risk to that view of gold headed higher.
Yeah, I mean, it's possible, but we have to keep in mind, is the gold allocated or unallocated? Because if it's unallocated, then you need to look at the interbank rates because they need to put the gold somewhere, and the gold's already been financed with something else. So it's actually very complicated. But that said, we could definitely see other countries joining the bandwagon and selling some of their gold.
And talking to technical analysts, they tell me that the long-term trend could remain intact even with a pullback to around 1,500. Is that a common view?
It's a very common view. I mean, there seems to be a lot of demand support at 1770, 1750, down to 1700. It keeps going down. There's a lot of demand support. And I just don't see any reason why it won't rally. This is a healthy correction. The big target right now is 1650, came out of Europe this morning. If we hit there, it'd be a great time to get in.
Larry, something else you've been quite bullish about in terms of the outlook has been copper. But on technical, you're talking technicals out. Technically speaking, you say copper actually doesn't look that great at the moment, you think?
Copper, to me, is very boring and very uncompelling, if that's even a word. It's not a compelling story right now because the Chinese have been very good and very patient, and they're just not going to chase after prices. At $4 a pound or under, you can see that they're buyers. And we saw it last week when copper got under $4. We saw copper stocks in Shanghai fall off for the first time in 6 weeks. There's no rush right now. And unless the auto sector in the U.S. Starts to explode, unless something else happens that we don't know about, they're not going to chase after prices. It's a great opportunity to perhaps sell options on copper and wait to see what happens.
Yeah, I saw some comments from Frank Lesh, who you might know from Chicago, their Future Path Trading. He says for the moment, copper is stuck in a trading range, awaiting clarity on two things: Chinese demand and the health of the Western world. It sounds like we might be waiting a while.
Yeah, and the thing about that is that think of it this way. If you get short copper and you're wrong, that'd actually be a good thing. I would love to lose money that way because that means everything else is great. If our echo data continues to come out pretty good, if it gets better, if the situation in Europe turns around miraculously, copper will go back up to $4.30 or $4.40 a pound. And then, hey, I lost money on that, but I made money on everything else. So it's a great indicator to look at, but I think we're stuck in the mud for the next 3 or 4 months.
Larry, do you think that we're going to see greater correlation between copper and oil prices as we get a recovery coming through?
I think it's a correlation until it's not. Like right now, it seems to be a really sharp correlation. Other times it's not. It's all based on these big macro factors. What's the Fed going to do next? How much more are we going to bumble in Washington? How about sovereign debt? Who's going to take a haircut? So copper and oil are two great things to look at, and they are highly correlated right now.
Larry, with just a few minutes left, what do you think are some of the other major macro themes that played out in the market today that we should take note of, given we kick off our session in a couple of hours?
Sure. Well, in the U.S., we've had 2 big rallies in a row, back to back, on no volume except for the last hour, and the market basically languished most of the day. But I think what's happening, keep in mind that our banking sector in whole was down about 18% on the month of August, compared to the S&Ps being down only 9% on the month. There seems to be a reversion trade, and I think that's going to reverberate into Australia, where you're going to see the financials and the banking stocks start to catch up, at least to parity, to where they were in reference to the broader indexes.
Fantastic. Thanks so much, Larry. Appreciate it.
Thank you.
Great stuff. Larry Schober there from Efficient Capital Management from Chicago.